You think that the public builders are going to continue to have an outsized share of the home building marketplace. Why do you think that?
It's a good question. Look, I think that there's some very interesting dynamics going on in the industry right now. And frankly, it's not that different than what we saw last year. There's just very little existing home inventory. In fact, under 1 million units should be double that. So to the extent that demand is out there, and honestly, demand is still really good, it has to be satisfied by going over the new construction market. Now, within the new construction market, the builders are call it 45% market share, the public builders, I should say. They will continue to gain share for a number of reasons. One, they have size, scale advantages, which are very difficult to replicate by the smaller builders. And they have the ability to offer financing, buying down mortgage rates and things of that nature that makes the affordability equation work for the buyer. That's something that is very difficult for the smaller private builders to replicate and frankly cannot be replicated by the existing home market. So it seems like a very good environment for share gains to continue. We're looking for about 900 basis points of growth outside of the market.
Well, that's really interesting. I guess what I'm hearing you say is that the capital that the public builders have at hand gives them the power to finance and to buy land that smaller builders don't have. Am I right?
To finance the actual mortgage, correct. But also, you're right. In terms of procuring land, labor, and materials, size and scale matter. If you're a trade, you want to work with a builder that's going to guarantee volume. If you're buying lumber in bulk, you're getting discounts. If you're buying appliances in bulk, you're getting discounts. And that also is certainly the case on the land side, as you mentioned.
Let's talk a little bit about the gains that you just mentioned, about 900 basis points, 9% higher, than the market generally in 2024. That would follow on a major outperformance last year of about 13 percentage points for the home builders. Why are you so confident?
That's correct. I think that the big continue to get bigger here. And I think we're going to see continued consolidation within the smaller builders because of this inability to compete with the larger scale builders. And this financing sort of advantage that we have in this market where rates are sort of hovering around 7% is something that it really shouldn't be underestimated. If you're buying from a public builder, you're not paying 7%, you're paying 5%, you're paying 5.5%. And that ability to finance has opened up the window for a larger number of builders in an environment that we all know is constrained from an affordability standpoint.
XHB, go ahead. XHB all-time high Wednesday, Lennar all-time high Wednesday, KBH 52-week high Wednesday. You do not think, though, as I understand it, that this positive performance for the home builders rubs off or helps the building supply companies or the building supply retailers, I suppose?
Well, we don't cover the retailers, but we do cover the building product companies. And what I would tell you is no, I think it actually does. Now, maybe not to the same extent, and I think that's the point you're getting at. Now, the public builders are obviously exposed to 100% new construction. The suppliers or the building product companies in our coverage are called 30% exposed to new construction, maybe 60%, 65% to repair and remodel. I think repair and remodel is a little bit more tied to the consumer where there could be weakness later in the year.